Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping on every order, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 40,000 new customers who have recently made the switch to SD Bullion. Why pay more?
This is the Doc with the SD Weekly Metals and Markets Wrap. Joining us today is our good friend Craig Hemke of TF Metals Report. It's great to have you with us, Craig.
Doc, it's always a pleasure. We're in the midst of what seems to be almost a summer doldrum at this point, so we'll try not to be too doldrum as we speak to everybody today.
Well, it seems like 2 weeks in one here with the holiday in the middle, but not to be unexpected. And it seems like every single time here, Craig, in the thinly traded holiday week, we had a holiday smackdown on Monday and then again on Wednesday. Really nothing new.
Yeah, we've seen this play out a few times in the past, haven't we, Doc? Jeez Louise. It's the same old playbook, it seems. And we're now at a point where I think we have to be at least slightly cautious. I've proceeded through this year with a good degree of confidence that what we've called the generally accepted narrative was going to fail. And that was the idea of that was put forth immediately following the election, that the dollar was going to get stronger under Trump and that interest rates were going to spike, and all this infrastructure spending and tax cuts and all this other stuff. And I've said since about that next morning, I didn't believe any of it, but it would take a while for that narrative, to crumble and for it to be clear to everyone that it had crumbled. And so I've been thinking that price would move forward for both metals throughout 2017, but kind of in a 3 steps forward, 2 steps back type routine, ultimately seeing the highs for the year in the fourth quarter. And that's been working just fine. We had lows in March, we had lows in May. Now, unfortunately, with this latest move and the smash that we had back on Monday, and so we're kind of at a critical juncture, not only for price, but for my narrative, that we would see the highest prices for the year in the fourth quarter. We're just going to have to see if prices can hold these levels. And what I mean by that, around 12.20 and around 16 in silver. And then hopefully, once we get deeper into the third quarter and into the fourth quarter, it becomes clear that instead of, this booming economy and all this jazz promoting tighter interest rates and Fed changes and all this kind of stuff, that eventually people are going to start thinking about how maybe, maybe 2018 will be more back to QE and loose policy and a failing economy and all that kind of stuff. If that plays out, we may still very well be right, and we'll finish the year strong and head into 18 strong. But we are no doubt at kind of an interesting juncture here with silver back to being even on the year. The most share indices are back to being even on the year, and gold's up about 6% or so. So we definitely want to stem the tide here and try to move forward. Perhaps we'll get a break with the employment report tomorrow. We'll just have to wait and see how this plays out.
The other thing, kind of a big picture in my mind, while gold and silver aren't responding right now, the way the USDX has been trading certainly seems, in a long-term view, positive for gold and silver here. Right now, recording Thursday afternoon, the USDX is trading at 95.80.
Yeah, and again, that thing double topped and kind of plateaued on that Trump trade up around 103.5. So what is that? 7%, 7.5% down year to date? But yet silver, we're all told, well, silver's just a commodity, right? And therefore it's going to trade, when the dollar goes down, silver should go up, but it's not. And so that's a very interesting, I guess, lack of correlation thus far this year. And, and you and I have talked in the past, and with the advent of computer trading and with HFT computers now controlling, pick your percentage of the global markets. They say in the stock markets, as high as 90% is just computers swapping positions back and forth to each other, 90% of the trading volume. Well, you can assume it's probably about that much in the metals futures as well. The dollar versus the yen seems to be the key driver of these HFT decisions to buy or sell paper gold. And even while the dollar has come down, like we said, 7-8% year to date, dollar yen is only off about 4%, and thus gold is only up, 6? And so if we can get somehow the yen to strengthen against the dollar, rather, or continue to strengthen versus the dollar and accelerate, then that's going to help us get these computers to buy the gold derivative on the COMEX. In the meantime, though, yeah, it's frustrating to watch because a lot of people think in that kind of 20th century mindset that a weaker dollar is good for gold. Well, on balance, yes, but we need to be more specific here in 2017. A weaker dollar versus the yen is good for gold. And that's what we haven't really seen over the last month or so.
We'll see a little bit more of that as the year progresses. And I guess going with your narrative, similar to what I believe, I think as the second half gets going here, the market's going to start to realize that any significant tax cuts are not likely coming in 2017.
Yeah, and that was always kind of the hole in the argument anyway, Doc. Is it Trump's going to cut taxes and then do this $1 trillion infrastructure plan, and that somehow all of this new debt was going to somehow be inflationary, and it was all just because money was going to magically appear, and the Fed wasn't going to monetize any of it, and thus interest rates were going to have to rise, and some of the basic economics were being thrown out the window. How could long rates rise in the face of funding that deficit? The interest on the national debt would explode. That didn't seem to matter. Well, the only thing that really mattered, if you go back to late last year, was that the story was if Trump got elected, it was going to be a disaster. It was going to be the worst thing could ever happen. It was going to be mayhem, global chaos. And as soon as it was clear he was going to be elected, on that election night, Tuesday, the 8th of November, yeah, you know what? The dollar was way down, and the dollar yen was way down, and the stock market futures were limit down and all that kind of stuff.
Gold was up about $50 that night, I think.
Yeah, exactly. Gold was $13.35, something like that. And then magically, in the wee hours of that next morning, a new narrative was put forth about how great it was going to be for Trump to be president. And it included all those things like the infrastructure spending and the tax cuts and what a boom this was going to be. Well, wait a second, where was this 48 hours ago? How come you weren't telling us that then? That seemed to take hold. And that's all part of what pushed gold and silver down all the way into the end of the year. But now, as you said, the dollar index is actually now lower. Get that, Doc. It's actually lower right now as we speak than it was at those lows on election night. So all of that pumping of the dollar and that index went from basically 96 to almost 104. All of that's been taken out. So that whole, if you think of this narrative being like a three-legged stool and one of them was king dollar, right? Well, that leg's been kicked out. And so we'll just, again, we'll have to be patient and see how the world responds, how the markets respond, as it becomes even more clear as we get deeper into this year that, none of this stuff, none of that narrative put forth on the 9th of November is holding true. And then we got all this geopolitical stuff. Here we sit on the first week of July, and it just seems like, oh, ho-hum, there's just no interest in the metals, no interest in the shares. Well, let's not give up hope just yet. Maybe we'll get, by the time we get into the fall and into the end of the year, we may be kicking some fanny and moving up quickly. And, this whole summer doldrum thing will be long since forgotten.
On that note, Craig, let's talk a little bit, without going into too much specifics. We were chatting before the show started about our friend Andrew Maguire believing a big influx of physical gold orders is coming soon. Let's talk a little bit about that and what your thoughts are related to the matter. We're right about in the crunch time from his original prediction. Is he changing his timeline at all, or is he still pretty adamant that it's near?
Andy did this thing with Eric King about a month ago, and then actually said it's going to be 26 days or something like that. And so a lot of people looked at the calendar and thought that he was referring to something by July the 5th. And I know he tweeted something the other day that there's been a slight stall, but that it's coming. Look, I can vouch for the guy. I feel comfortable personally vouching for him in that I've considered him a friend for probably 5 years. I've met him. I've met his lovely wife. We've hung out. We had lunch together. He's a real person. He's not, some like secret agent out, trying to screw people by getting their hopes up. The guy is out there. He's made it his life's mission to get fair physical pricing for gold and silver, not only for us, but for the mining companies, for their employees, for their families. This exploitation by the bankers to manage the paper price for their own profit, primarily, at the expense of, your average Mexican miner or, Filipino miner, whatever. Andy's out there trying to change that. And we are all in his debit for that. He is, I just was emailing him today. He's traveling the world trying to do his thing to get this done. All I can say is he's supremely confident. And that's why he went on the record originally back in whatever it was, March. That's why he told Eric King whatever he told him a month ago. I just know he's supremely confident that he's really onto something here, and that there are going to be some significant problems for the banks in terms of physical metal demand in the weeks ahead. And he's sure it's coming. And so I'm confident that he's right, because I have no reason to doubt him. So I just ask everyone to be patient. And again, and he would even say this, I'm sure, if you're out there trying to trade paper based off of something he said, I mean, that's a fool's errand too, because, the banks a lot of times front run this kind of stuff, right? So he's more concerned about the physical picture. And I think at the end of the day, if he's right and the paper derivative scheme begins to collapse, because remember, it's a confidence scheme. It's a game of musical chairs, right? When we've got, whether it's 10, 20, 50, 100 beneficial owners for each ounce, who knows? But it's that confidence scheme that we always talk about when we do these things. If that begins to fail, and if we do finally move toward a physically derived pricing structure, that's going to benefit all of us, not just the paper traders who are trying to capitalize in the very short term.
And to your point, Craig, I mean, who would know better than the banks themselves if they were staring at an imminent physical shortfall and problem to deliver the metal? So if you're trying to just bank in on a paper trade, you're going against a lot of inside knowledge on that front.
Well, that's right. That's right. And that leads to something that I would imagine we probably touch on eventually in this call, Doc, and that's the COT structure, the commitment of trader structure again. It's something I watch, kind of closely. I always think the information's semi-dubious because it's reported by the CFTC, and you and I both know firsthand how corrupted they are. But nonetheless, I think there's some information to be gleaned there. I don't get into the weeds, like some of these guys that make a living off of dissecting the COT, and they talk about all the different subcategories. And I don't even care. I just look at the broad sense, the speculators versus the banks, basically, right? The hedge funds that manage money versus the banks on the other side, who issue the contracts and always taking the short position. And I think to the extent that the report is sourced and surveyed the same every week, and you've got good records, and you can see historically what the COT structure was versus price, and then how it plays out in the future. And if you know that the banks are the ones that control the markets, then you can kind of glean then from their positioning which direction price might be headed, right? If the banks get heavily short like they did last summer, well, you're probably wise to think that maybe price is going to fall, right? Most of the time. Well, then we can also go back to 2015 when, for the first time really on record, there were days when we deduced that the banks were actually net long of gold on the COMEX. And that was right in December of 2015 when it was making its bear market lows. The only really good news I have to report for everybody, by the time we get this week's COT report, which is still due on Friday, even with that holiday back on Tuesday, I think we're going to see the silver COT in an extreme that's going to be pretty close to where it was in July and in August of 2015. Now, again, that didn't mean silver went immediately from 14 to 21. It traded around 14 to 15 all through the fall and into December. But then, again, after these banks had transferred a lot of the risk of being short to the speculators, and that's what they've done again now, all of a sudden price rose by 50%. So that's maybe one bit of good news we have out there.
All right, well, Craig, why don't we shift gears a little bit here? I'd like to ask you your thoughts on the cryptocurrencies in relation to gold and silver. I know a lot of people in the alternative sector have been making the claim that cryptos are rising. They're doing, right now this year, they've been doing what gold and silver would be doing if they weren't suppressed. And yeah, I think that's true. But I'd like to get your thoughts on how they're impacting the metals markets right now, and also your thoughts on how the move in the cryptos might impact the metals markets in the future, whether that's over the next 6 months or 3 to 4 years. And kind of my working synopsis here, or thought process is, the crypto market is still a really small total market cap, but it's really heavily concentrated in people like yourself and my mindset, people who they want out of the fiat currencies and they're looking for something else. I mean, Bitcoin particularly, but now Ethereum, a lot of these cryptos have made millionaires and multimillionaires with the moves. And my thought is, at some point, a lot of these investors are going to look to park some of those gains into the physical metals. I mean, if you've made $10 million in Bitcoin, some people, but I don't think all people, are going to take all $10 million of that dollars into cash. They might take $5 million in gold and silver and $5 million in cash, or if they're taking out $10 million in Bitcoin, just for example. So I guess, what's your thoughts on that, as well as currently, are we seeing the cryptos take money out of the gold and silver markets, or do you think they're still so small that it's insignificant?
Yeah, I don't know if it's so much that they're so small. I don't think they really compete with each other from a pricing standpoint, in that I don't think that for it to be affecting the gold and silver, the paper gold and silver price, you'd have to have people that would have otherwise be buying paper gold and silver be buying Bitcoin. You know what I mean? And lessening the demand for paper gold and silver. And I don't think that's the case. I don't think the people that are buying Bitcoin are the same hedge funds and managed money and that type of people that are buying gold futures on the COMEX. And I think they're two separate groups. But I think the other idea, though, I think is valid, Doc, and the idea that as it goes up and you've made however many dollars in Bitcoin, yeah, why would you, what are you going to do? Cash that out if you want to lock in some gains and then go buy what? Apple?
Right.
How the average Bitcoin owner thinks. In relation to Bitcoin and why it's gone up, I've seen this on my own side. I think there are people that are angry that Bitcoin has gone up and the metals don't go up, and they recognize that the metals are held so firmly under control by the banks and by the Bank of International Settlements that it gets frustrating, because you see Bitcoin, there are no, at least not a great extent, Bitcoin derivatives. There's not like 100 paper owners of every Bitcoin out there. It's not like maybe there's some inventive way that you can short Bitcoin, but it's not like, JP Morgan's in there carpet bombing the thing. And so what you're seeing is kind of a natural supply demand. And that's why it has gone up. That's why I first bought Bitcoin about a year ago, when I heard about what they call the halving, meaning that the future supply was getting cut in half while demand was going up. I thought, well, hell's bells, how does that not work? And so I started buying it at $500-$600, and then now I've just I've got 2.5 Bitcoins for free, basically. People see what's going on there, and they see the pure supply demand move, and they think, well, God, if only gold were allowed to do that. Now, on the flip side of that, and this admittedly would be a good problem to have, Doc, but can you even imagine you running your business at SD Bullion, or me managing the sentiment of people on my site, if the price of gold per ounce was fluctuating over the last month the way Bitcoin has?
It'd be crazy.
Yeah, exactly. Where it's 3,000 one day and 2,000 the next.
Yeah.
One, that'd be very difficult for you to manage and hedge as a business owner dealing with the stuff. And God, people would just be suicidal on my site, if you watch that kind of stuff happen.
They'd be buying, though, like the insiders in the metals industry, everybody always says, as long as price is doing something, if it's going up, people buy. If it's going down, people buy. As long as if it's just sitting there and consolidating, it's not interesting, it's not exciting. But as long as it's moving, your emotions get involved and people make decisions.
Yeah, it'd be a good problem to have. Don't get me wrong. I'd love to see gold go from 3,000 to 2,000 in a day, just because it means it got to 3,000. So it'd be a good problem to have. But I do think that, totally something that is just out there like that, the way Bitcoin is, that would be, that'd take a little getting used to for most people in the precious metal sector. So anyway, I don't necessarily think that they compete with each other. I just think there's just a lot of frustration from the average precious metals holder to have, one, missed out because it wasn't something that they really took seriously or fiddled around with. I know that's how I'd feel. I mean, like I said, I had 3.7 Bitcoins or something, and now I have 2.7 Bitcoins, which is hardly anything. But at least I feel like, hey, I've had some fun with it. If you didn't have any at all, if I didn't have any at all, I'd probably be, a little ticked off about it too. So I understand that feeling, I guess it's not necessarily jealousy, it's anger, whatever it is. But at the same time, I don't think it's bad for gold and silver that it's going up. I do think it increases awareness of alternative forms of money outside of this dollar-based system, and that's good. And as you said, it might ultimately, as the Bitcoin price continues to rise and people want to take, cash some of that in and turn it back into cash, dollars, they might then turn those dollars into gold. So it might lift all boats in that regard too.
Yeah, and as evidencing it, we were talking about a little bit with the gold and silver side. Let's talk a little bit about how that sentiment, it's really the worst I've seen in probably a decade, how that sentiment is affecting the demand here in the retail market. As we were chatting before the show, I mean, we're both seeing it. People come in contact with in the industry. We're talking about it, whether it's some of the big newsletter guys that publish on our site, that a lot of their newsletter subscribers are down 20-30%. Just look at the U.S. Mint numbers for Silver Eagle and Gold Eagle sales. I don't know if you've looked at them any time recently. The U.S. Mint has sold less than 1 million Silver Eagles in 2 of the last 3 months. The only month they sold more than 1 million was May, when we had that big price smash in the first 2 weeks and demand picked up. Only 986,000 last month. And gold, it's even worse. I mean, 1 ounce Gold Eagles, the Mint sold 1,500 coins in July.
Oh, jeez.
half ounce Gold Eagles, they sold 0.
Goodness
June, July, and April.
You ought to call them up and just get a couple, just so you can move it off the schneid, Doc.
Yeah.
You and I we talked about this, I think, the last time I was on the show. And, what is capitulation? What is, and I think in a traditional sense, people think capitulation has to do with price. Like something's got to go way, way down, stock's got to go to 0, that kind of. Gold have to go to $200 an ounce to be capitulation. Well, to me, capitulation is emotion, right? It's not, it's tied, the emotion is tied to the price, right? At the end of the day, we're talking about emotion and sentiment. And to me, boy, I tell you what, I think we're there. And I've said this now several times this year. What happened last year, I think, finally broke a lot of people's backs, whether it is from buying more metal, buying more shares, or whether just simply not buying more and just sitting tight. We had this just terrible beatdown that caught everybody by surprise. And if you go back to October of 2012, it was a year after the highs. Gold had gone down to 1,500, but it was back up to 1,800. QE3 was beginning. It was going to be $1 trillion freaking dollars. This seemed like the easiest thing in the world, right? Okay, now we're going back new highs. Everybody was excited. And then that was it, man. And, it was in April of 13 that we had that $200 smash in the middle of April. And we were all the way down by June of 2013. We were all the way down below 1,200, not far from where we are now. So we've gone sideways for the last 4 years. That is draining, obviously, for everybody. But I think what happened last year was really difficult on people. If I try to measure it by, people on my side, what they say, my own subscriptions are down maybe, 10 or 12% from this time last year. And I think what happened, when we took off out of the gates last year and had that huge rally, the Hui index tripled. Gold went from, it was supposed to go straight down in 2016 because the Fed was going to be hiking. And instead, it went from 1130 to 1380, whatever it was. Silver went from 14 to 21. And a lot, nobody was buying at the bottom, much just like how nobody is buying now, right? I mean, who was buying, hey, I'm loading up on them shares at 100 on the Hui in January? No, everybody was, no, that was the last thing anybody wanted to do after what we'd been through. So then price goes up, and it went up fast in a couple of weeks, and then it pulled back, and it went up fast again. Then all of a sudden, it pulls back in May, and then really starts to take off in June. You got Brexit.
Then June hit, and I think silver had gained about $4 in a month.
Right, exactly. And you had Brexit, and you had all this stuff going on. And I think it was about that point that the average guy that had been on this train for the last 4 or 5 years finally thought, okay, the bottom's in. And they start, they buy some more, they buy some shares. They start buying First Majestic at 16 instead of 3, And then we get the rug pulled out from under us for any one of a handful of reasons in the back half of last year. And I think that little, I guess in hindsight, we'll call it a fake out, though I don't think that's the right term, but I think that you get the idea. I think that broke a lot of people's spirits. That they held in there. Things finally took off last year. They didn't believe it at first. Finally, after, prices had already moved up substantially and the shares, some company had doubled or tripled, they finally bought that. And then wham, they got their ass kicked again. Fool me once, shame on you. Fool me twice, shame on me. And, there are a lot of people in the sector that got their butts kicked a second time because they bought in the spring of last year when things were suddenly looking good. And so putting it all back together, I think that's why sentiment is so poor right now. And I will continue to describe it as a capitulation of sentiment, because really, who's buying, right? And again, you see that's what you're talking about in your mint sales. Look at the shares are still not going anywhere. And so again, I think we're back to where we were at the end of 2015. Everybody's convinced interest rates are going higher. Everybody's convinced, that the gold's going to go lower and all this kind of stuff. And we're back from a commitment of traders positioning to about where we were then as well. And so it would not at all surprise me if once again we are at some type of intermediate term low here, and that we still rally into the end of the year, catching most everybody by surprise, setting us up for a good 2018. But as we stated when we got going, when we first started here, this is kind of a critical point. We don't want to see gold extend and get all the way back to its lows, that we saw back in December. So let's keep our fingers crossed in the days ahead, and then hopefully we can right the ship.
And the one point I'd like to make about extreme lows in sentiment like this is that sentiment is likely to lag price if and when price does start to move to the upside. So what that can mean is that we could have a good sustained move to the upside on fundamental reasons that will then later be continued and fueled by sentiment returning, because the sentiment's not going to be there at the beginning.
Yeah, exactly. And if you combine that with something like what Andrew's talking about, with a surge in physical demand, that could create a lot of pressure. We talked about the commitment of traders report in silver. What you want to look for when that report comes out on Friday, look at the total large speculator short position, not the net position, where you subtract the short from the long. Just look at the gross short number, and it's going to be very close to an all-time high. At least I expect it will be. And if that's the case, that is a lot, 40,000 contracts worth or so, maybe even more of potential short covering in the paper silver market. So that's something that could spike price pretty quickly too and catch a lot of people by surprise. But at the end of the day, like we said, it's a talking point. It's a fun thing to debate, because How can you prove that it's some type of capitulation of sentiment? I don't know. I can't prove it. I can just tell you what I think. So it's a fun thing to think about. And maybe the commenters on your side on this thread is something they can debate back and forth whether that's the case. But it certainly feels that way to me.
Yeah, it's certainly something that can be felt. All right, well, buddy, before we let you go, if you can let the listeners know where to find all of your regular, excellent analysis of the metals markets.
Well, thank you. Yeah, we do our best. You know, it's really not. What's hard, Doc, is it's not what it used to be. You know, even back, you know, when I got my start and all of my renown and everything, you know, it was pretty easy to see the footprints of the banks in the paper metal markets and then kind of predict where price would go from there. You know, now everything is so under the control of HFT and these algorithmically based HFT buy and sell programs that, you know, it's just a different deal than it ever has been, which makes it kind of challenging from both a short and long-term basis. But we do the best we can. And the site, I think, is extremely valuable, not only from, you know, the what my contributions are, but from what everybody else puts on there, too. All of the site members are constantly looking for information and research and analysis. And it's almost like a big wiki sometimes with the information people add. But it's tfmetalsreport.com. People, we know we're all in this together. We're all trying to see each other through this frustration, but also this, on a broad sense, this economic crisis, this end of this Keynesian experiment. And Doc, we're just going to be getting through it together. You running Silver Doctors, me, TF Metals Report, and we just hope there are brighter days ahead. Hope everybody will check us out.
All right, well, we'll wrap up this week's show there. So for the Doc and Craig Hemke, thanks for tuning into this week's SD Weekly Metals and Markets Wrap.